Hey there, everyone. My name is Ryan Schewel. Welcome to my channel. And the topic today, I want to talk about investor sentiment profiling based on social media comments. So I chose to look at YouTube comments. I like YouTube a lot. I post a lot of videos on YouTube. There's other things you can use, Reddit, Twitter, there's Facebook, there's a whole bunch of them, right? I tend to like this one, so I'm going to focus on this one, but the concept is the same. You can go ahead and fetch comments from anything that you want, Reddit, Facebook, Twitter, whatever you want, pull that into Python, do some analysis on that, and try to understand the overall investor sentiment, which is the feeling. And basically, are investors positive, negative, or neutral? That would be the sentiment or the feeling that they have about the market. And that's what they're going to be talking about in their comments, right? That's how we can define positive, negative, or neutral based on the poster's comments. So but just to take a step back just for a second, why would we even be interested in measuring investor sentiment comments and creating these profiles for these people? There's a bunch of reasons, right? For market intelligence, strategy augmentation, behavioral finance insights, you can get into the psychological feeling of people, right? When they're posting comments on these social platforms. Risk management is a big one, right? And there's many use cases for this. Portfolio managers can use it to adjust positions based on FOMO, which is fear of missing out, or panic cycles, things like this. You see this in the market all the time. There was a big drop in the Dow and the S&P 500 all across the board, all the indices last Friday. So people were kind of skittish about things, right? So you feel these tensions or panic cycles or apprehensions or anxiety in the market, right? So you can measure that, you can test for that. Traders can monitor sentiment, divergence, right, for swing opportunities and try to trade on, investor psychology, people's feelings. Are people mostly positive about the market, mostly neutral, or mostly negative? That's what we can measure. And we can look at long-term strategies and analyze investor sentiment and investor confidence and use fundamental analysis in our analytic processes too. So I have my API key saved in a text file. This is YouTube API key. I have the API key saved right there on my desktop, so I can go ahead and run this. Control Enter to run the cell. Okay, or you can hit the play button over here, or you can go to run over here and then run selected cells. There's a few different ways to execute the code right here. So I have a note down here. You can go ahead and apply for your own API key. This is totally free. YouTube is very generous in the amount of data that they allow you to scan and to do analysis on. So you can get crazy with that. And you would basically just go to this link that I just shared with you, log into your credential page, and you'll have all the information you need right here. Okay, so again, it's free, easy to set up, takes, I don't know how long, 60 seconds, maybe 90 seconds max, and you'll have everything you need. My credentials are all set up, so my view here is going to be a little bit different from yours. If you haven't set it up, if you have set it up, then that's all set, right? So that's what it's going to look like. Go ahead and do that. So what I'm doing here basically is looking at YouTube. I'm looking at ID snippets, and the search that I'm looking for is market crash. Okay, so you do have to put in some kind of search criteria just so YouTube knows what you're looking for, right? And if I go over here and go to a couple of videos, www.youtube.com, and just look for one or two videos. The first one I have right here, this is an ID of the video. So every video comes with a unique ID that's appended onto the end of the URL. When you click on these videos, you'll see the ID, right? So I click on this one. I like to listen to this music when I'm doing my work. So this one, just some random thing, but these are types of things I listen to as I'm working. So just some music right here, right? So here's the idea. If you look after the V, everything to the end of the URL string is the ID. So if I paste in the ID that I just copied, remember this is market crash. This is what I'm looking at. So the first thing I see over here is this. Go down a little bit. Is the stock market too high? Are we waiting for an upcoming crash? Okay, so that's the basis for my data. We have some comments down here. I'm going to go through and scan through all these comments, fetch the comments for all of these videos. I think I have 10 or something. How many did did I request here? Oh yeah, number of results equals 10, or max results equals 10, right? So I think I actually have a few more than that. Anyway, so if you go here, we can look at another video ID again after the V equals sign. I guess that's video equals. I think that's how they do it. And put that in, you can see the next video over here. And again, the search criteria was market crash. So that's what I'm looking at. But again, like you have to keep an open mind here. You can search for anything you want on YouTube, right? I'm just looking at market crash. Crash is coming. That's what this guy is talking about. But it's not what you think. The truth about the economy, okay? And again, all the comments are posted right here. So we have 296 comments. I'm going to go ahead and screen scrape those comments, or actually like fetch it from the API. I'm not going to screen scrape anything here. So it comes from the API. It's similar but different. It's just like a technical difference there. So this was the last one that I looked at. And these people don't look too happy here. I guess they're expecting a big crash coming up. And then we have 39 comments. And just to beat a dead horse here, so if I go for one more ID over here and append that after the V equals, plug that in there, enter. And it has to have something relative to market crash, right? This guy looks pretty scared right here, and it looks like a market crash. It should be in the text, in the title of the video. Sorry, in the title of the video. Yep, market crashing. 300,000 subscribers. I wish I had that. I have less than 2,000. I was trying to get the YouTube channel up and build this thing out. Nothing has really gotten a lot of traction so far, but maybe someday. I don't know. Hopefully some days. And this has 127 comments. So that, again, is the source for the information. When we get the, oh, here we go, maximum results equals 25. So that looks like about 25 to me. I think this is 25. I get the IDs for all of these videos, and then I can go ahead and extract all the information from each video based on the comments that people are making on the video. Okay, so again, we're focusing on YouTube in this case. It can be Twitter, it could be Facebook, it could be Reddit. There's other things out there. I did a video on, what was this, food service or something? Oh, I forgot. This was a long time ago. Totally forgot. I've got too many videos on my channel now, over 360 at this point. So what the heck was that? Some food service something, just another social platform where I could go ahead and screen scrape the comments that people were posting. It was like, what the heck was that? Man, this is making me a little frustrated now. Food reviews. Oh, let me see here. I'm way off on a tangent here, probably for no reason whatsoever. No. Oh, Yelp. It was Yelp. Okay, so a long time ago, I did a video about Yelp posts, kind of the same thing. It's another social media platform where people can share their thoughts and ideas. You can collect the information, fetch it, and then insert that or import that into Python and do your analysis based on that. Okay, so let's continue on here. Control Enter to run the cell. I'm looking at the video. Maximum results is 100, and I just want plain text coming from all of these 25 videos and then all the comments that people are posting on these videos. And then it says, now I have this message. YouTube API. Let me look at this for a second. This should not be throwing an error because I just tried this before and that worked totally fine. So if it worked before, it should work now. But let me see what's going on here. Let me see. If there's an issue, we need to fix it, right? Can't ignore it. Okay, so the only thing I can think of is I switched the API key to the text file. I used to have it embedded inside the cell, but it's not really good practice to put it in the cell because obviously like somebody can see that, right? And they have access to your specific API key. You don't really want that, right? This is personal and confidential information. It's like your login credentials for your email. You don't want anybody to have access to this, right? You don't want to expose these things. So I don't know what that was, some random thing. I get these random error message all the time. Run it doesn't work, run it again, works fine. So it should work fine the first time, but maybe it doesn't. So you can see what happens here, right? So I made the fetch to all of these 25 video IDs, right? Based on this search criteria right here. So market crash, looking for 25 results. Here's the 25, and you can make this more or less, whatever you want. So I'm pulling in all the comments on the social media platform on YouTube and looking at all of these comments that people are posting, right? So if you look at this, it's very rich, very interesting, lots of data here. For a person to go ahead and read this and do some analysis, that's kind of a big ask. It's a big lift here. So I want to use some kind of natural language processing, or at least some basic data science techniques to go ahead and tell the computer, okay, here's a ton of text. I'm going to dump this on you. I want you to tell me what's going on, and you do some analysis here and then report back to me. Okay. So we basically set up like a subject matter expert sort of logic here, where the computer is going to do the whole lift and then tell me what's going on. So right here, I'm just looking at the first 10 comments. So this is called slicing. Anytime you see the colon and 10, you have 10 comments. If I looked at 25, you would have 25 over here. Control Enter. And then I'll switch back to 10 because I'm actually calling this 10 over here. Right? But you can see how that extends up quite a bit when I look at 25 comments. And this is not 25 characters or 25 or whatever, right? It's actual comments. So 10, in this case, I'll switch back to 10 comments posted by users. So now at this point, I want to understand the polarity or sentiment based on how strong or how aggressive the language is. So if it's very, very positive, I'm going to say if it's greater than 0.2%, so 20%, or less than negative 0.2, right? So negative 20%, that's going to be bearish. This is going to be bullish. And otherwise, it's going to be neutral. If it's greater than 0.2, bullish, less than negative 0.2, bearish, anything in between those two criteria, I am going to assign a label of neutral. Okay, so Control Enter to run the cell. Okay, and again, based on how strong that sentiment is, we're going to assign positive, negative, or neutral sort of definition for that. So this sounds bullish over here, waiting for a crash, has cost more investors than buying too high. Okay, so that sounds bullish. That's according to the computer. I think I would agree with that. I think that sounds kind of bullish. This was bullish too. Okay, so same comment, probably coming from the same person. I'm not sure if one person just saw the comment and copied and pasted it and reposted it. I'm not sure what happened there. Anyways, two bullish comments. This one sounds bullish. I'd really love a video from you guys on structural asset allocation and what ideal percentage splits to make the most sense for someone pursuing FIRE. Forgot what that is. Retire early. I know the RE is retire early. Fixed income, retire early. What the heck is this? I saw this thing before. I totally forgot. FIRE, retire early. No, that's the wrong one. Let's see what this guy's talking about. Early retirement, how the FIRE movement works. Financial independence, retire early. That's it. Okay, so yeah, it sounds positive. Neutral, checking in from the DMV. Yeah, that really has no purpose here whatsoever. So I guess that's neutral. We could probably kick that one out. It doesn't really add any value here. Neutral. Generally agree. However, in those rare times, so this guy's talking about the market crash. There was several, right? 28, 87, 2000, 2008 was the this was the dot-com crash. This was a mortgage crisis. This was just some random thing in 87. Market crash in 1928. That was a big one. I certainly wasn't around back then. I remember the other three though. So, okay, so look at another definition here. Bullish, set it and forget it. Stoic investing for most people should be DCA. My personal opinion, I'm not sure what DCA is, but whatever. That sounds kind of bullish. And we have some neutral. So hopefully you see how this sentiment works, right? Based on the comments coming from a whole bunch of different users, we assign bullish, bearish, or neutral labels to these comments, right? And then we're going to do some analysis based on those comments. So Control Enter to run the cell. We're going to do a little cleaning here. So stripping up, cleaning up the cells just a little bit here, filtering out comments that are empty, none, or not strings. So sometimes comments come in as just blanks, right? There's actually no comments. So we're going to get rid of that. Anything that needs to be cleaned up is just clean up, just basic things here. There's all kinds of different ways to do cleaning. This is just very simple, very basic type of cleaning. And we're doing some filtering too, so we can understand the bullish, the bearish, and the neutral sentiments. So over here, we have basically 132 bearish, 516 bullish, and neutral is 1395. That's just represented over here. So this is neutral, this is your bearish, and this, this is bullish, and this is the bearish over here, okay? So we're looking good, and we're making good progress here. So I want to go ahead and set up a BERT transformer just to test this model basically and give it 3 prompts. So I want to say, once the FinBERT has been tested right here, so FinBERT tone, FinBERT, this is financial analysis, and we're using a BERT sentiment classifier. So this is a pre-trained model. I have several videos about how to use these models, either training the model yourself or using a pre-trained model. This one's free, it's pretty accurate. It's been trained on a whole bunch of corpus of text related to financial terminology, financial nomenclature, things like this, right? So the model has been trained specifically on financial terms, and it knows basically what to expect, right? Almost like a ChatGPT. Again, we're using a highly trained SME, subject matter expert, or model here to do some analysis for us. So the model is trained on financial terminology. I am going to put in a comment that's kind of negative. The stock market crashed and investors are nervous. So this is my comment that I put into the BERT model. Once it's trained and tested, BERT is going to tell me, is that positive, neutral, or negative? So it comes back with negative, 99% confidence. So highly negative, right? The stock market crashed and investors are nervous. That's my comment. BERT detected that pretty accurately. I'd say that's totally fine. That is a negative comment, 99% confidence. I am not sure what's going on with the S&P 500 right now. So some uncertainty, some ambiguity right here. That sounds kind of neutral. Again, 99% confidence. And then here's one positive comment. Again, these are just 3 comments that I came up with. The market looks like it's going to rally today. So I think that's positive, and BERT agrees 63%. That is probably positive. Okay, so basically, we're looking at 2 different techniques here. So the FinBERT I just showed you, this is a pre-trained model that's been trained on a whole bunch of corpus of financial text. So it's basically a financial subject matter expert. Before that, we use this model over here, TextBlob, to do some simple analysis of whether or not text is bullish, bearish, or neutral. So it's 2 different approaches to solve the problem. Really, it's whatever your personal preference is. I don't think one is necessarily better than the other. It's just like, what are you trying to accomplish? What are you trying to do today? And then try to pick the best model that's going to suit your needs. So just to compare these 2, TextBlob, the first example I showed you, is rule-based, lexicon-based, uses predefined sentiment dictionaries, general purpose English, polarity score from -1 to 1. We saw some examples of that. General sentiment analysis, very fast and quick. Emotion-based classification. So the second technique I showed you is FinBERT. This is a transformer-based deep learning natural language processing model. It's based on financial text, earnings reports, analyst commentary, things like that. Categories are financial, positive, negative, and neutral, kind of like the TextBlob, right? Financial specific sentiment, tailored, stock news, or stock-based content. A little bit slower because this is natural language process engine, and it's huge. This thing is huge. So it's going to be a little bit slower performance, but it's going to be very accurate too. And its ability to make predictions about the sentiment, again, negative, neutral, or positive, and it can predict sentiment actions in financial documents or financial news. So basically you would use TextBlob when you want a lightweight, quick, general sentiment detection. That's what we saw an example of. And FinBERT when you're analyzing financial news, earnings calls, or stock market related YouTube comments. Okay, get my coffee there, so I have a little perk and a little boost, so I can get through this thing to the end. Now we can visualize sentiments over time. So Control Enter to run the cell. Again, we're looking for bullish, bearish, or neutral, greater than 0.2, greater than 20% sentiment. I'm going to say that's bullish, less than -0.2, that's bearish, anything in between, neutral. And we have the recommendations down here. So here's the comment. Here's the time that this comment was published. Again, this is all YouTube data, so time that the comment was published. and the sentiment. Okay, so bullish waiting for a crash has cost more investors, and we saw that before. So these two are actually the same comment. I'm not sure exactly what happened there, but anyways, comment was posted twice. This is bullish. I'd love to see some videos. So what we saw before was exactly the same. Right, that comes from over here. We're just taking everything. There's the same three comments, the top three that we came across. Just taking everything instead of putting it in a list and printing it, we're putting everything into a data frame at this point. Okay, so everything gets into a data frame and it's pre-structured pretty nicely. So a data frame is a little bit like a table in a database, or like an Excel spreadsheet where you have columns and rows. So based on this data frame, I can go ahead and look at the comments, do group buys, group by the comments, and where is this right here? Comment published at sentiment counts. I'm doing a count over here. And that's it. We're just counting up the bullish, bearish, and neutral comments. So going back a few months here, now is, what's the date? August 4th, 2025, going back about 6 months. You can see some of the comments posted over here and the counts of those comments. So this is back in March. So sentiment is neutral. Red is bullish, so it's positive, and blue is bearish, so that would be negative. You can see the counts of all these. Kind of see a little spike over here for some reason. Not too sure why, but it spikes up a little bit for the positive, neutral, and bearish. Then it spikes up a lot over here, okay? And we have seen a big jump in market activity. So this is neutral, bullish over here, and some bearish over here, right? So I don't know exactly what drove the big spike in the number of comments. This is the number of comments coming from YouTube, but it's pretty slow before this. Maybe people are getting a little bit more, developing more anxiety about the market. I mean, the Dow is pretty high at this point. If we look, let me see, finance.yahoo.com. If we look at the market for the last 6 months, because we're going back to March here, and look at the Dow. Where is it? I see the Dow over here. It is pretty high, 43,000. All right. If we go back in time, it's kind of increased a little in the last 6 months. I think I haven't really paid close attention to this, but I think it's up quite a bit in the last 6 months. If I go back 6 months at time, you see what happened here. So we can get a little perspective here on what's going on in the last 6 months. And this is spinning, so it's working. It's just very slow. Very, very slow here. Yeah, this is way too slow. I have to get a new computer pronto. Yeah, all these messages popping up all the time. So slow, 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 slow. Okay, fingers crossed. Should work. Okay, so I can tell it's down 1.23%. I was looking for the chart so I can actually see it. But I can tell the market's down about 1.23% in the last 6 months. That's what that bubble indicates right there. If I go to year to date, I hate when I try to do these demos and this thing just doesn't work. It just does not do what I ask it to do. I don't know why. Okay, so year to date's up about 3.4%. Last 6 months, down 1.23%. So there's the 6 month chart. Okay, so it is down just a bit. Year to date, it's up 3%. 1 year, up 10%. So anyways, I just wanted to look at the chart real quick and just get a quick visual. So the market is kind of up. It's kind of up in the past year, right? Up 10%. Year to date, it's up just a tad in the last 6 months. That's what we're looking at here, 6 months. The market's basically sideways. I think it was down 1%. That was it. So not a big deal, not a big move. But there is a lot of chatter on YouTube right now, and a lot of this is neutral comments. So we're at 244 and 105, and bearish is 21, right? And early August, and over here, 6 months ago, these numbers were way lower. So we're looking at 22, 7, and this is 3. So for whatever reason, and I'm not sure why, I'm not trying to analyze this, and I don't really care necessarily, and I'm a little bit curious, why are the comments jumping up 10%? I'm sorry, 10 times, right? 1,000%. Why are the comments jumping up 1,000% in early August versus 1,000% less in early March or the end of February, whatever that is? So that's kind of interesting too. Anyways, we have the bullish, bearish, and neutral. Let me hit Control Enter to refresh this. So we have counts of all three, and I'm going to go ahead and look at the S&P 500. So I'm pulling in S&P 500 data for the same beginning and end dates that I used for my my first analysis for looking at the comments. So the end of date comes from sentiment counts, beginning date comes from sentiment counts minimum, right? So the minimum date comes in here. So we're just aligning all these perfectly well, right? So instead of like typing out the dates and like retyping or maybe fat fingering a key or maybe having different date sequences or something like that, I want to use what I had at the beginning for the comments to get the sentiment or to get the GSPC, which is S&P 500 data, to pull that in. So I want to look at the bullish, bearish, and neutral comments, number of counts, right? And look at the correlations of these relative to the S&P movement, right? So I want to try to understand, is there more negative, positive, or neutral comments? And what is the return on the S&P 500, right? So hopefully that makes sense. We're trying to put together the pieces of the puzzle here. So I'm looking at all these comments. Is it positive? Is it negative? Is it neutral? If it's positive, it's bearish, right? If it's negative, it's bullish. I'm sorry, I said that wrong. If it's positive, it's bullish. If it's negative, it's bearish. And if it's neutral, then we haven't really made up our mind on either side. Is it bullish or bearish or neutral? And how does this correlate or move together? Correlation is a co-movement in the comments that we're getting from YouTube and the S&P 500 performance. And if I go back and look at the S&P 500, I think this is just PC. SPC. Let me see, S&P 500. Yep. Just to take a quick look, I probably shouldn't do this because the computer is so slow and it's really annoying to use. But I'm gonna push my luck anyways. So 4.53% in the last 6 months. That's what we're looking at for comments. Remember, that's what we got from YouTube. If I go year to date, 7.3, the 1 year kind of mimics the Dow. I think the Dow was up about 10%. This is 18%. The S&P 500 tends to be more tech heavy than the Dow 30. Okay, so now we have all the bullish, bearish information over here. Control Enter. I want to look at all these co-movements, the correlations here, and try to understand, is there a strong visible linear correlation? Okay, I'm looking at the dots, basically showing the counts of bullish comments and then the return of the S&P 500. And I want to look at all this mixed together. So I'm kind of putting this into a blender and hitting max and analyzing everything together. And I want to understand if there's a high bullish comment, number of incidences or volume of counts, and look at the returns on the S&P 500, okay? So basically, based on the bullish comments, I see one over here, or 45 bullish comments over here, and the S&P is down just a little bit, about 1.59 negative percent, and it doesn't really seem to be like up or down. It's kind of close to zero the whole time. Not driven by any kind of positive bullish comments coming from YouTube, really. So basically, there's no correlation whatsoever between the number of comments that are bullish or the counts of bullish comments and how well the S&P 500 is performing. There's really no correlation here whatsoever. But that's what we test for, because I wouldn't know that if I didn't run the analysis, right? So now I want to look at a rolling 7-day plot. I'm getting the rolling time over here just to look for an average. This is looking at one point in time, right? So this is everything as it happens, kind of like that movie Everything Everywhere All at Once. Remember Michelle Yeoh? I think that's her name. She starred in that movie. So that's Everything Everywhere All at Once. But the rolling analysis will show us over time, is there a correlation, right? So not really looking at a snapshot, but more of a temporal time series analysis at this point. So again, looking at bullish comments, rolling 7 days, I can hit Control Enter, and here we'll see that there are windows where sentiment and market returns move together in a positive direction, and windows where they move against each other in a negative direction, right? So you can have a positive correlation up to the right, negative correlation down to the right over time, right? So correlations don't have to be positive or negative, they can be either. But we're looking at the whole movement and trying to understand the overall sentiment for these bullish comments, and can we conditionally use this to make predictions into the future, what's going to happen tomorrow and in a couple of days and next week, based on the comments that we're getting from this YouTube API, right? So overall, there is some positive correlation over here. 0.8, we'll always go between -1 as an extreme and +1. +1 would be perfect positive correlation. -1 would be perfect negative correlation. We're getting pretty close down here. And over here, we can see a correlation of 0.6. This is 0.4. This is -0.86. And over here, we have a positive 0.80. So it really bounces. It's very choppy. It doesn't really indicate any kind of consistent measure over time. It's not very useful to try to use this data to make predictions because of the choppiness, right? So we can't really say, are there bullish sentiments? There actually are, but is this driving the S&P 500 returns? It's really not. They're really disconnected. In some cases, they are positively correlated here and over here, but in some cases, they're highly negatively correlated here and here. So I can't use this as any kind of reliable means to make predictions. So I'm going to look at this just one more perspective to look at a lag. So lag is looking back in time. So we're looking at a rolling window of 7 days in the last cell. In this case, I want to look back 1, 2, and 3 days and understand, looking back in time, 1, 2, or 3 days, and looking at the bullish sentiment, is there any kind of correlation, again, at close to 0, 0.09 negative, 0.08 negative, 0.02 negative. To be statistically significant, it has to be 0.7 or greater, or negative 0.7 or less, right? So we don't see any correlation, and this really isn't very helpful to make decisions based on people making comments on YouTube. Is this a good indicator for future stock price movement? It really isn't. There's no correlation here whatsoever. Again, it has to be greater than 0.7 or less than negative 0.7, and we could have a negative correlation. So that actually could happen. You could actually have a lot of bearish comments and the market is down. That would be a positive correlation. Or bullish, the market's up. That's another positive correlation. We can also have cases where people are very bullish, making bullish comments on YouTube, and the market is tanking. That would be a negative correlation, right? Or bearish and the market is surging up. That would be a negative correlation. But we don't see any whatsoever. So I'm not too concerned about that. I'm going to move on to specific stocks. So we're just looking at the S&P 500. This is kind of a proxy for 500 different stocks and the overall movement of these 500 different publicly traded stocks. Now we're going to look at specific tickers. I'm getting this from the Dow 30. I didn't pick all 30. I just picked a few. There's 3, 4, 5, 6, 7, 8, 9, 10, 11. I guess there's 11 stocks here. These are all coming from the Dow 30, but I didn't pick every single one. I want to look at these specific 11. I think that's what we have. 1, 4, 5, 6, 7, 8, 9, 10. I think it's 11 here, whatever it is. It doesn't matter. So I want to look for these specific stocks and look for comments relative to these stocks. So I'm going to filter just for these stocks at this point and see what people are posting on YouTube. Originally, remember, we looked at 25 different YouTube IDs based on market crash. That was the search criteria. And again, I'm going back to the sentiment analysis using TextBlob. We use 2, Finbert classifier or TextBlob. I'm going to switch back to the TextBlob. That works pretty well, I think. And again, look at bullish 0.1 or greater. Before I was using 0.2 or greater. So I'm reducing the threshold just a bit just to pick up more comments, because with these specific stocks, you're not going to have like a whole bunch of people posting about Home Depot and Goldman Sachs and Amazon and IBM. So if they're just posting on the market in general or just general comments, you could pick that up and match that to the S&P 500 pretty easily. But how many people out there are actually saying specific comments about McDonald's on those 25 videos that we saw? How many are specific to Verizon? How many are specific to Walmart or Disney, right? You're not going to get that kind of granularity necessarily. So I want to reduce the threshold just a bit, just to pick up more cases here. If I set this to 0.2, I might get nothing, just because there might not be a whole lot of people talking about Home Depot on those 25 different YouTube videos. Now, if I put that up to, instead of 25, if I put that up to 5,000 or whatever, 1,000, 5,000, maybe YouTube wouldn't even let you scan 5,000. I'm not sure what the limit is. But if I put it up to several hundred or maybe 1,000, we would get more in Home Depot. I only have 25. I just want to run fast just to illustrate the point here of what's happening. I don't care about 1,000 different videos necessarily. If you want to do this for yourself and do a more comprehensive analysis, maybe you do need 5,000. Maybe you need that big number. I'm just trying to work with a smaller number and just get something done and just show you how this stuff works. That's my intention here. So I have a start date and an end date because I want to go back in time and measure. This is called back testing, right? So we're going back in time and measure what was actually going on with these 11 stocks. I'm going to download the historical time series data for these 11 stocks, right? Based on closing price every day, get all of 2024, and then measure the cumulative returns of all of these stocks against the sentiment for all of these stocks. Again, positive, negative, or neutral. That's what we're looking at. And I want to look at the historical returns to see, can I actually use this technique to create a trading strategy that's going to be profitable, right? So we're aligning the sentiment to the market days using the returns data index, right? So we have all the pricing information starting at the beginning of 2024, going to the end of 2025. Actually, I thought I put 2024. It doesn't matter. So we have 2 years of data. I thought this was 1, but now it's 2. So you can choose whatever time frame you want. So I'll do this one more time because I thought that was 2024. I must have played around with the code at some point and changed that. So I'm looking to see, are there comments found for IBM, Johnson & Johnson, JP Morgan, Verizon, Walmart? No, there's actually none, right? So I'm going to get the comments for these other stocks that are not in this list. So I have like 5. There's just no comments from those 25 videos, and that's fine. It is what it is, right? But for the other 6, I actually do have comments. It says empty data frame. Give me a second here. So let me see here. 0 days. Let me go back more. I think maybe that's why I had to switch that. Maybe I had to get more. Let me get 06. So I'll do this for 6 months, 6/30, and I'll go to 2025-01. Okay. I think this is better anyways, because going back in time, this should be totally fine. Okay, I think I was going back a little bit too far and we weren't really getting meaningful data because the comments are coming in fairly recently. That was the last 6 months, but some of this historical time series data for the stock prices and the changes in those prices, yeah, this looks a lot better now, was basically for 2024, but those were even before the comments were coming in, right? So the overlap would be March. Actually, I'm thinking about this now. Maybe I should just set that to like March to June or something like that. This can be a little bit arbitrary. It's really up to you how you want to do this analysis. So you do have to get some data. You have to have some overlap. So here I have bullish days for Home Depot 8, bullish days for Goldman Sachs 51. Amazon has none. This is Coke, I believe. McDonald's, no bullish data. And Disney has 35 days of bullish data based on the comments, okay? So Control Enter to refresh this, and we can see the chart. I'll blow this up a little bit or expand it. So we can see here the first bullish sentiment I get going back to the beginning of 2025 for, this is Home Depot. Let me see what it says over here for Home Depot. I had 8 bullish days, so kind of a low number. Goldman Sachs had more, 51. And Disney had more, 35. So let's see what this looks like. This is pretty low. So we only had a couple bullish events or bullish comments. Goldman Sachs is more interesting, right? We have bullish data from March 2025. And then this is overlaid on the return for the Goldman Sachs stock. So this is pretty interesting. You can see that the bullish comments and the stock price are kind of correlated here, right? So they are moving together. Amazon really had none. Coca-Cola had just a little bit, right? Over here we can see, I guess, a couple of days. What did Coke have? Let me go back to the actual number. Coke had 9, so that's pretty small. Disney had 35. So Goldman was interesting. We had some overlap here or overlay between the bullish counts and the stock price. And over here, Disney, we had some too. So cumulative returns, kind of negative, dipping down here for Disney, but we did have some bullish comments, and the comments seem to follow the stock price, right? So that's very interesting. I think if I go back and change these dates just a little bit, just a little bit over here and make this March 1st, because that's when we started to get the comments from YouTube, right? Remember that? That came in March 1st. I keep these stocks, these 11 the same, and make this 0301 to 630. So this is okay coverage. I think this is somewhat arbitrary, but to illustrate the point, I think this makes a lot of sense in this case. We get the comments from the beginning of March until current, until August. I can actually make this 7. Now we'll catch 3, 4, 5, 6, 7. So 5 months of historical time series data for these 11 stocks. And we'll see the overlay between the count of those bullish comments coming from YouTube, and overlay the bullish comment count on top of the historical stock return. So Control Enter to run it. So we have five months of data at this point, getting closing prices. So again, no comments for IBM, JP Morgan, Johnson & Johnson, Verizon, or Walmart, but we do have some, okay? So I think we have, what is this, Home Depot or whatever, Disney. So this looks good. We have coverage here, Home Depot, Goldman, Coke has 30 days of bullish counts, and we can see the stock price in just a minute, and Disney has 35. Let me refresh this, looking at, again, the cumulative return and the counts of bullish comments. So let me expand the cell, expand out. Okay, so Home Depot, just a few bullish comments over here, not a whole lot to look at, and the stock price is up a little bit. But we have more bullish comments for Goldman, right? So Goldman looks very interesting. This kind of follows the same pattern, more bullish comments, and the stock is up. So I think that makes sense. Just a few bullish comments, or maybe none for Amazon. What does it say over here? Amazon actually had none, and McDonald's had none, but Coke and Disney had some. So Amazon, will just disregard this as no correlation between bullish comments, because there was no comments. Stock price was up a little bit. That's interesting, but no comments. Coke had a few comments, so some bullishness. Bullishness, is that even a word? I'm not sure, but some bullish activity here, bullish comments for sure, but not a whole lot. And the stock was kind of flatlined, a little bit bouncy, a little bit choppy. McDonald's, we had no comments. Disney, we had some bullish comments, and the stock was up a little bit here. So early April, kind of down, but then it had a little bit of a bump by the end of the summer, or by the end of July. I guess we're into kind of like the middle of summer here, a little bit past the middle of summer, and the stock is up. So basically, what have we accomplished so far? Filters, commenting by ticker. Those are the 11 tickers I just showed you. Text classification using text blob. You could use Finbert, text blob. There's probably a few other techniques. These are two very common methodologies to use. That's why I showcase these two, but there's probably a few other things that you can experiment with. We have done aggregation by sentiment, by day, and by ticker, merging daily stock returns from Yahoo Finance with all those 11 stock tickers with the counts of the bullishness and the bearishness and the neutral recommendations, right, from the text blob, creating dual axis Plotly charts. There's a dual axis. So on the right, we have bullish sentiment. On the left, we have cumulative return indicated by the blue and the red. We can see that over here. And I like these Plotly charts. You can interact with this. You can turn this on and turn this off. And again, if you want to zoom in and see some details, you can do that as well. All right, so I like those interactivities with the charts. We've also created clear visualizations to do this comparison. The left axis is the cumulative returns for the stock, and the right axis is the bullish comments, okay? So very interesting overall. I have some more notes down here. I'm not going to talk about all the notes, but just high level bullish sentiment and rising price. The use case could be supporting long-term positions or momentum-based strategies, bullish sentiment, and falling price, okay? So again, the comments on YouTube can be positive, but the market can be falling. This could be a potential buy on dip, but it requires more confidence, fundamental analysis, technical analysis for more support. Bearish and rising prices could mean contrarian traders, may go long, expectations, fear of missing out, right? FOMO, fear of missing out, or others may prepare for reversals if the sentiment suddenly flips to bullish. Okay, so you don't necessarily have a lot of bullish comments and positive stock prices, or bearish and negative stock prices. It could be confusing. It could be the opposite, and you can have something that's kind of contrarian or counterintuitive. But the last possible scenario here is just 4, actually, could be bearish and falling prices. So those two could move together. This could mean if sentiment bottoms out, this could precede a turnaround or a blood in the streets scenario, right? So those are all the possible outcomes and the different scenarios. Hopefully this was informative and entertaining and inspiring. Try to make all my videos very straightforward, explain how all the code works, showcase all the code and run all the scenarios in real time so you can see how this stuff works, right? So it should be very educational for any aspiring finance professional or data scientist or machine learning type of personality out there, right? So that's it. I'm going to wrap it up. I guess we are at, I can't see the time now. We're at 45 minutes. Wow, that's longer than I thought. Okay, so I was doing some rambling. And of course, the computer was running slow at a couple points there. So that kind of drag us down a little bit. But yeah, 45 minutes, that's plenty to exploit this whole concept and to explain how everything works. I think we hit the mark there. Mission accomplished. Thanks, guys, for your time. Thanks for sticking through to the end. I'm going to wrap it up right now, and I'll see you soon when I post the next video. Goodbye for now.